Hi, I welcome you all again in accounting. My name is Ayush. Uh, Today we will see the bank reconciliation statement. So earlier we have seen the introduction part in very brief regarding accounting and related concepts of accounting, some way of doing accounting like journal, cash book, pass and what is difference between all those. So we have already covered. So we are moving a step further today. Today we will see the bank reconciliation statement. So we will start with a bank and some entry methods like how do we make entry in cash book and how do we make entry in passbook. And once we make any entry in cash book, then what effect happens on the passbook? And similarly, when we make an entry in passbook, what does effect happens in cash book? Okay. So basically, we don't make any entry in passbook. Passbook entry is made by the bank. We only maintain the cash book as per the records of passbook. Okay. So the first entry we make in the cash book, that is the debit entry, credit entry. So in credit entry, what happens when changes are issued by the firms to creditors of the firm, then bank will debit the firm's account when these checks are actually paid by the bank. Okay. Means what happens is when you make a cash book entry in the credit form in your cash book, the same entry will be debited into your passbook. Okay. And what is credit for the cash book means? Credit for the cash book means we are issuing a check to someone. Means we are paying to someone. Once we are paying to someone uh, in the passbook, it will be treated as uh, credit, but in the bank, it will be credited as the debit. Okay? So this is the basic difference. Once you make credit entry in cash book, the same is debit entry in the uh, once you make a credit entry in the cash book, the same is the debit entry in passbook. Again, when we make a debit entry in the cash book, same is the credit entry in the passbook. What happens when someone is paying you something? So you are getting a check. That is a payment. You delivered some. You have delivered some services to anyone, or you have sold something. Then what happens? The the person is paying you something. He is your debitor or customer. He is paying you something. So you will make that as a debit entry in your cash book. But what happens in the same in the passbook is that is a credit entry. Okay. So pass in the passbook or bank statement we have a separate entry a column for credit and debit. So it will clear very clear that it is the inflow of the money or outflow of the money. So you have to be very particular about it. So you make a separate entry in your passbook. Everyone has seen the passbook from childhood. The bank passbook is the same that, right? So there are two type of things in the bank. What happens? One is a saving account. Another is the current account. But when we are talking about the business scenario, we see the current account in the use. What happens in the current account is you can use some overdraft. What is overdraft? Let me tell you. So you have 10 rupees in your account and you are withdrawing only 4 rupees. That means you have 6 rupees in the credit. Okay, so you still can withdraw the 6 rupees. Once you withdraw those 6 rupees, then your balance will be zero in your account. Okay, but in the current account you have a facility that what you can do on the basis of your earlier record of banking. You can do uh, withdraw of more than 10 rupees. You have the 10 rupees deposited in your account, but you can withdraw more than 10 rupees. That is, suppose you have withdrawn 14 rupees. So what does that mean? You are in the debit of 4 rupees. That is a negative amount, or you can say that is an overdraft. Basically, this is how overdraft is being created. Okay. Now next is what is banking reconciliation and why we do it. Then banking reconciliation concern maintains the cash book of recording cash and cash transactions. The cash book serves the purpose of both the cash accounts and the bank account. What happens is uh, business concern maintain the cash book. What do they do? They maintain a cash book. Any business firm, suppose you are a shopkeeper, and so you maintain your cash book recording. So there you record all your cash transactions and bank transactions as well. So how do we make the bank transactions and cash transactions both there? We make a debit entry for uh, our cash book transaction and the same amount of credit entry in the passbook transaction. If we are paying to someone, so we are making a credit entry in the cash book and we are making the equal debit entry in the passbook. So the cash book serves the purpose of both the cash book and bank account. So here we maintain the record for the both in the cash book. Next is bank also maintains an account for each customer in its book. So when you go to bank and check out your bank statement, so they give you passbook or bank statement where bank maintains all the records or all the transactions made by them. So here bank doesn't know about the cash book. So what entries have you made in the cash book? They only make entry regarding what transactions of your bank account has happened. Okay, so they only maintain all those in the passbook. Then what we need to do? We need to reconcile the cash book and passbook statement. So for this purpose, we prepare the bank reconciliation statement. We in a certain interval, we want to know. So what amount of cash have we spent and what amount of cash we have earned, and all those record you maintain in your cash book, and you want to match that with your passbook. Okay, so this matching process is called the banking reconciliation. Okay, and we make a statement for that. So that is called banking reconciliation statement or BRS. So this is the definition. Bank reconciliation statement is a statement prepared to reconcile the difference between the bank balances as per the bank column of the cash book and passbook of any given date. So it's very clear. Banking reconciliation statement is a statement prepared. So why do we make it? To reconcile the differences. So which kind of differences? Differences between the balances. So which balances? Balances as per the column of the cash book and passbook. So what entries we have made in the cash book, and same entry for the other entries of the same time period in the passbook. So we have to be specific about some time period. We take a deadline here. When we do bank reconciliation, we take deadline. That means uh, we are doing the reconciliation till 31st March. Okay. So that is the deadline. What does mean? That mean is you are making the change. You are reconciliating the entries till 31st March. You are not going beyond. Like some entry that is going to be happen on 1st April, you are not going to consider that. Just anyone. So suppose you are an student and you want to make your monthly balances. You want to see how much money do I have in the pocket and how much have I spent. So you create a deadline for that first. Once you create a deadline, then you make that uh, account. Hmm? So in the BRS, the same way you have to create a deadline. That's the very specific thing that you have to maintain a last date on which we are doing the reconciliation. So now we will see the regions for differences. What happens is generally when we do the reconciliation, we find some differences in the bank account, or we may find some differences in the cash book. So suppose no, the thing is the final balance doesn't meet in a lot of time. So what could be the reasons? The first reason could be so it, it may happen due to some timing or transactions. Okay. So another reason could be the recording of transactions by the bank. So same transactions are not being recorded at the same times, or due to some errors or something. So first we will start with the differences due to timing. Why we do get the differences due to timing, and what are these differences? How do we get these differences due to timing? What is this? Huh? So transactions are recorded in the cash book or passbook at a different date. It may happen. What happens is there are two conditions. How does this happen? So first is check issued but not presented for payment. So what happens is you have issued a check to someone. Yeah, this is the 1,000 rupees check. So what happens is according to you, you have paid the 1,000 rupees to someone. So you make an immediate entry in the cash book. Suppose you are paying a check on 30th of March and your reconciliation date is 31st March. Okay. So then what happens is mm, the person whom you have paid is not going to bank on 30th or 31st March. He is going to bank on the 1st April. So you are making a reconciliation and you have a deadline of 31st March, and the person whom you have paid is going to bank after this deadline. He is going on very 1st March, April. Okay? So here a bank will clear that check on 1st April. They will start process. Uh, so bank will make an entry on 1st April, and you have make an entry on 30th of March. And between 30th of March and 1st April, you have a reconciliation date, deadline actually, of 31st March. Okay. Now, what happens? You have made an entry and bank has not made an entry. So, there could be some differences and no one is wrong here. Like, you cannot force anyone when you have to take payment from the bank. So, both are the correct. The payee is correct, and the who has been paid is also correct. So no one is wrong, but the difference has been created. So we will see these issues in the banking reconciliation statement as well. This is the very first issue, and second issue due to timing could be someone is paying you. check. But what happens is that check has not been encashed. What does that mean? So someone is paying you a check. Well, how much time does it take to come into your account? What happens is today is 30th of uh, March, suppose. Okay. Suppose then what happens? Someone is going to bank and deposit the check into the check box. This is how anyone presents the check into the bank. They directly don't go to counter for the check purposes. What they do, they go to bank and they put their check into the check box. And suppose uh, the check has not been taken out from that check box on 30th of March. So that check is taken out from that box on 31st March. Okay. Then what do banks see is this is the SBI bank and the check is of ICICI bank. So there is a particular channel. How do we encash that check? So first they ask to ICICI that this check is valid or not. If this is valid, you make this much of this much amount of transfer into my bank. So this process takes at least 1 to 2 days time. So if it is taking 1 to 2 days time, then it's already in April, so first or second April. What happens in that way? You have a deadline of 31st March for banking reconciliation. Again, the same thing is happening. Is bank has been check has been deposited into bank, but not yet collected. Okay, so here again the difference has been created. So we will see all these. How do we make entry for these into the reconciliation? Okay, so this is the very first issue, differences due to timing. Now we will see the second difference, that is difference uh, due to differences due to recording of transactions. Like these differences may arise when transaction is recorded by the bank in the passbook but not recorded in the cash. So what is differences due to recording is the entry has been one-sided. The same entry is not recorded in passbook and cashbook both. So what kind of entry these could be? Some bank is allowing some charges like interest or annual charges, or bank is paying you some dividend or paying you interest, or bank is paying to your, or bank is paying to in third party on your behalf. So like you have told the bank you directly make my health insurance payment. Okay, so you don't come to know, but bank um, does that transaction just because you have made bank authorized you make payment on my behalf. So bank does that payment, and you don't get to know that that payment has already happened unless you reconciliate the bank account and your cash book. So this is how these differences are created. So some examples of these are like interest allowed or credited by the bank charges and interest charged or debited by the bank, or direct payment made by the bank extending instructions of account holder, as already talked about the insurance payment that you have authorized to bank to make the payment. Another is a direct deposit made by the customer. Sometimes what happens is someone does the NEFT transaction or online transaction. So that online transaction is something that happens in your bank directly. You don't come to know and you don't make the entry into your passbook, cash book, but the entry for the same has happens by the bank in your passbook. So this is again a single entry, not the double entry here. Then bank receivables collected by the bank on your behalf behalf, like bank takes the payment the same way bank makes your payment to someone. The same way bank also takes the payment on your behalf. So that is again a single entry, dishonor or check will discount. So we will see in this point later what is dishonor or bank bill or check. Bill payable made by bank on your behalf. We have already talked this thing. So next go to uh, another point. That is difference due to error or omission in the recording. What is this? These differences may arise due to an error committed in recording transactions in cash book by account holder or in the passbook by the bank. What happens is sometimes you make a wrong entry either in the cash book or bank makes a wrong entry in the uh, passbook. So this could be a reason or that differences may occur. So we have to see and the reason why this mistake has happened and what could be done to resolve these mistakes. So uh, these error, let's see in the further of these errors. The error committed by the account holder in the recording of transaction. Okay, so the very first error that could be by the account holder. So what account holders, what mistake that account holder could make? The first is the account holder has issued a check, but that has not been recorded in the cash book. So this could be an error. So check deposited into bank but omitted to record in the cash book. So you make you deposit someone is depositing a check on your behalf or you are depositing a check for yourself. Anything could be the any reasons could be here, but that has been not recorded in the cash book. So you are not making a proper entry. The reason is that. So this could create a difference. Another is error in totaling or balancing of bank column in the cash book. So in the cash book, you have two separate columns related to bank and your own transactions. That is bank column. So what happens here is you don't do the particular thing here. That is, you don't do the balancing and totaling of the account. What is the inflow of cash? What is the outflow of cash? You don't do the proper balancing, so you don't get the correct number. So that could be another error. So for that, you have to be very particular while totaling, and you have to cross check all the uh, accounts multiple times. Another error that could be made by the bank. So what error that could be? So those error could be like wrong debit or credit account in the account holder account. Someone's sometimes bank puts the wrong entry, or it might be that it is a computerized process. So computer might make some error. So at your account, someone the entry happens of someone else. This might be an issue. So more we have seen these a few times when we find that so this is a wrong entry. So then you realize, oh, it's not the entry of my account, it's the entry of someone else's account. So then the bank officials just make that corrected manually. So that could be one way how the errors could be happened by the bank. Another could be sometimes you see that bank is charging for the same stay twice. Like you, what happens today? Suppose today is the last day of your interest payment into your bank, so, and there is sufficient amount in your bank account. And what you do, you make the manual payment. So you make a manual payment for that interest, but You have already authorized the banks to pay the or mm, you have authorized the bank to make that transaction by themselves. Okay, what happens is you have made a transaction, you have made a transaction of interest manually, and you see that the same amount has been charged again by the bank. So here you see the two entry for the same. So this could be an error. You don't record that bank has already done that because you don't know regarding the interest payment that bank has already made. But what you make the entry, you make entry in the cash book that you have manually charged. You have manually paid that interest. Okay. So this could be an second error that could happen due to some error in the recording process. Now we will see in the detail and the disowner's of check. The dishonor of check is also a type why differences is being created. So what is dishonor of check? In simple language, the it is like when check bounces, the check bouncing. Why does that happen when check is overwritten? Means the name on the check is not clear or written twice, so that could be a reason. Signature is absent. Signature is not made or doesn't match to bank specimen copy. Third is name of payee is absent or not clearly written. Who, so whom you are paying these things, and amount written in words and figures doesn't match. So in the word something else is written, and in the digit something else is written. Okay. So account holder is not mentioned clearly, or it might be absent. Account number in which account you want to make the payment, and drawers orders the bank to stop the payment of the check. Some anyone could be this like uh, you have issued a check, but you are now saying to bank that no, I don't want this payment to happen. You are canceling that check. So these could be things. Or court has issued some order like this check cannot be encashed. So this could be another reason. Or drawer has closed the account before the presenting the check. Like check has been issued, but when the person is going to bank to deposit their check, he finds that oh, this account has been like closed. So that could be an error. So, again, is the insufficient fund. You don't have the much fund, or the fund is insufficient in your account, and you have issued the check that is larger than that account that you have in the bank account. Or bank receives the information regarding death or legacy insolvency of the drawer. Like sometimes what happens is bank gets a information that no, this person has already died. So in that condition, bank cannot make the payment. Or alteration made on the check is not proven. Sometimes you make some changes in the name of, like you are writing the name, and you make some mistake in writing the name. Then you make the changes in the name and do the initial signature there. For and that signature is not matching to bank account, so that could be an reason. Or a date is not mentioned or written correctly on the check. So that could be another reason of dishonor of check. Now we will see the uh, preparation of banking reconciliation statement. The bank reconciliation statement can be prepared in two ways. The first is documenting of balance reconciliation statement without adjusting the cash book balance. And another way, a method could be filling the bank reconciliation statement after adjusting the cash book balances. So once you don't do the adjustment in the cash book, first, and in the second method you make the cash book adjustment first, then you go for the reconciliation with your bank passbook. Okay, so there are some conditions for this preparation. That is, do you have the favorable balance, or do you have the overdraft or unfavorable balance in the bank? So what is favorable balance? Favorable balance of cash book, that is debit balance, or passbook and credit balance. Perhaps you uh, in your cash book, your debit balance should be shown, and in the passbook, the same is credit balance has to be shown. So that comes under the plus column. When you make the bank reconciliation, you put a plus and a minus sign in the reconciliation statement, and all the favorable balances put in the under the plus sign, and all the unfavorable balance, that is the overdraft balances, that you put in the minus sign. Okay, so these are the two favorable and unfavorable balances. So there could be now four methods, uh, two methods for favorable balances and two methods for unfavorable balances. So how do you make the reconciliation? First is you start with cash book. Another is you start with passbook. When you start reconciliation, you have to take basis. On which basis you start the reconciliation? The first basis is cash book. Another basis is passbook. In the both, in the favorable conditions and unfavorable conditions, both you do these two methods. So total, these are four. That in the favorable you start with cash book, and in the favorable you start with passbook. You in the case of overdraft or unfavorable, you start with passbook and you start with cash book. Okay. Uh, Now we will start with steps to prepare bank reconciliation statement. So how do we do the reconciliation in actual? What happens? You have to first decide the deadline. Okay, you have to decide the deadline when you are going to start the reconciliation, on which after which date that will be the that will be deadline, and till that date you have to make the reconciliation. So, so the very first, either for the favorable or unfavorable both, you have to make a date selection. Okay. Then the first item in the statement is generally the balance as shown by the cash book or the passbook. So how are you going to start to do the reconciliation? Are you starting with the passbook, or you are starting with the cash book? The way you are going to start is, that's the method of reconciliation for the both favorable and unfavorable. Okay. So generally, what we do, we have the whole detail of the cash book. We are very familiar with the cash book. So, what are the entries we have made, and what are the transactions, and in which circumstances those transactions have happened. All those you are very well aware of. So, you generally start with the cash book. Okay? But we will see the examples of the both. What, how does it happen in the cash book, and how does it happens with the passbook when we do the start. Okay, the deposit checks which are not yet collected are deducted. Means in the favorable conditions, all those checks which are not yet collected but deposited into the bank. Okay, means the check has been deposited into your bank, but that has not been credited, and that has not been yet that has not been encashed yet, are deducted from your in your BRC. Okay, then all the check issued but not presented for the payment, those are added. What means, you are issuing a check to someone, okay, now here, and he is not going to bank on the same date, or the transaction in the bank doesn't happen on the same date, it happens a few days later. And in that condition, what happens is, uh, yeah, there's an entry mismatch, and so that mismatch is to be recorded in the positive side when we are doing the starting with something like cash book. Okay? All items of charge such as interest on overdraft, payment by the bank, standing instructions debited by the bank in the passbook but not entered the cash book. What happens is the bank is charging some interest, or bank is making some payment on your behalf, and you are not making entry of all those in your cash book just because you are not aware of that. Bank is doing that automatically, so that has to be in the negative side of the BRC statement. Okay. The next is all the credit given by the bank, such as interest or dividends, etc., to be added. So if bank is paying you something like interest or on your savings, so bank pays you interest time to time. So all those have to be in the positive side of the BRC statement. Okay. Another could be like whatever dividend you have some shares and all, and the dividends related to that is being paid to you. So that comes into the positive side. Okay. So on these basis, we match the BRC statement with the cash book total and uh, passbook total, and these two will be match exactly in the case of no error. Okay. Now we will see the issues related to overdraft. So what is the condition of overdraft? Overdraft means you have make some extra payment than the balance you have in the bank account. So this is basically a negative number. So what is saying that someone is saying I have 10 rupees in my bank. So he has 10 rupees saving in his bank. But in case of overdraft, he has made a payment of 14 rupees from that 10 rupees. Now he is in negative 4. The amount he has in the bank or she has in the bank is in negative numbers. So that is overdraft. Okay. Overdraft are where the bank accounts becomes negative and business in effect have borrowed from the bank. The same I have talked. When in the case of business, you have current account situations. In the current account situations, you pay some extra amount than what you have in your uh, account actually. So this is for this bank is allowing you. So this is how you make an overdraft. So in the bank account, overdraft is generally shown as a credit account. Like 4 CR means you are owing the 4 rupees of bank. You are in the negative 4 rupees. So after that, CR is mentioned. In the bank statement, uh, it's not CR. It is like DR is mentioned. Like in the bank statement where it is written that 4 DR. So that is you are in the overdraft. Okay, overdraft of 4 rupees that you are owing the 4 rupees of bank. So that is the amount you have to pay back to the bank. So overdraft is a negative number for the bank reconciliation statement. So in the bank reconciliation statement, if we have some overdraft, we will put that in the negative side. Then we will start the further, and all the further entries will be made as a favorable condition when you are not in the overdraft situation. Okay. So now we will see some examples. The very first example here is uh, related to favorable conditions, and we are starting here with cash book entry. So after that, we will see the favorable and starting with passbook entry. Okay. So what is the question here? Question here is Mr. Vinod want to make the BRC on 31st March. So here 31st March 2017 is given as the deadline, and so then we will see the entries. What are the entries that Mr. Vinod has made? So here it is showing bank balance as per cash book is 50,000 he has, and check issued but not presented in the bank, that is of 6,000. Okay, so these are a few entries that has been shown here, that is done by Mr. Vinod. So now we see how we have made the BRC statement for this. Okay, so we have 50,000 in our cash book. So this is a positive number. So this will come into positive side. We all know that simply if we have balance in a positive in our cash book or passbook, then that comes into positive side. If that is uh, what you say, if that would have been overdraft, then that have come to this section of negative. Okay. Now here the second entry is related to check issued but not presented for the payment. Okay. Next is check issued but not presented for the payment. So what happens here is the check has been issued, okay, by Mr. Vinod to Mr. Ram. Okay. So now Mr. Ram is not going to bank on the same day. So Mr. Vinod has issued the check, but Mr. Ram is busy in his own business, so he has made a decision that I will go to bank, but I will go after a few days. Okay. Then what happens is the moment Mr. Vinod has made 6,000 rupees payment by check to Mr. Ram. At the same time, he made an entry of 6,000 rupees in his cash book. Okay, but that is not presented in the bank side. That entry is not made by the bank. Just because bank doesn't know that you have issued a check or not. Bank knows about that once Mr. Ram is coming with the bank with the check and asking the bank person, so I have this check given by Mr. Vinod, so give me the payment of 6,000 rupees now. So what happens is here your target is uh, like passbook. Okay, so when we start with a BRC, we have to decide what is our target. So on the basis of target, uh, we uh, we do the BRC entries. So what happens here is entry will be in the positive. Why? Because this has not been presented in the bank, and rupees has not been drawn for the bank. Okay, so these are some extra rupees in the cash book. So here cash book in the positive. Okay, so pass. mm, what happens is uh, suppose you have balance 50,000 rupees in your cash book, and that is after the 6,000 rupees you have made the payment after the check issuing. So that check issued of 6,000 is not in this 50,000. These are different. Means now it is total 56. Okay, but bank doesn't know about all this. So here what happens is uh, a balance as per cash book. That means the same balance must have been in the bank as well. Okay, because this is how this happens. So now what you do is you have made a 6,000 payment to Mr. Ram. So in that case, your balance in the BR cash book side goes negative, but bank has not gone into negative just because bank is yet not knowing the thing. Okay. So our target is in the positive or zero. You have issued the check means you are into minus 6,000. Okay, but your target is here passbook, and passbook doesn't know about this 6,000. So passbook is in the positive or zero. Say zero, just because it is cash book is minus 6,000 that has been issued. Once you are paying to someone, so you are going negative 6,000, but your target is uh, passbook that is not knowing about this 6,000, so it is zero. So minus 6,000 is lesser than zero. So your target is in positive, you say. So once your target is positive, then you will make a positive entry. This is a hack actually. We have a rule that when we issue the check but not presented, we will put that in the positive entry. But sometimes there are some confusions. So to resolve that confusion, what you do is you see that where this entry should go. So in that case, we will first see how have we started the entry. Have we started the entry with cash book or passbook? If our entry has started with cash book, then our target is passbook. So on the basis of passbook, we see we make the entry in the positive or negative side. We see the effect on the passbook. Either passbook is now in the positive or negative. So if passbook in the positive, then we do the entry in the positive side. If passbook in the negative, then we do the if uh, if passbook is in the positive, then we make the entry in the positive side. If passbook here is in the negative, means your cash book is now has a bigger balance, then you put that entry in negative. Okay. So let's see with example. That example is our first entry. The check issued but not presented for the payment. Means you have issued a check of 6,000. Means your cash, suppose you forget about the first entry of balance, the cash book of 50,000. You don't look into the first entry. You look only into the second entry. That is, you are paying 6,000 rupees to Mr. Ram. Okay, Mr. Subodh is paying 6,000 rupees check to Mr. Ram. Means Mr. Subodh has issued 6,000 rupees to Mr. Ram, but Mr. Ram has not yet presented to bank. Means your not presented to bank means passbook doesn't know about it, but the cash book knows about it. Means cash book has gone to minus 6,000 because that has been issued to Mr. Ram. Okay, here now what we see that passbook doesn't know anything. Means passbook doesn't know anything regarding that. In that condition, what happens? Passbook in the positive and cash book in the negative. Passbook positive, so we will make a positive entry of plus 6,000. Now dividend collected by the bank. So you have some shares in the market or something. You are the owner of any company and you are getting some dividends from there. So here again, passbook. What happens with passbook? That is something. Payment is directly made to bank and cash book doesn't know about that. Okay, so passbook, what happens with passbook? A dividend of 8,000 rupees directly paid into the passbook, but cash book here, on the other hand, doesn't know about that entry. Okay, here we have again 8,000 rupees in the mm, passbook, extra 800. So you know your cash book doesn't know about this, and what does that mean? Again, the bank passbook is in the positive. Bank passbook is positive means you have to put that in the positive side entry in the BRC statement. Okay? So that entry we have made here in the positive side. Now another is check deposited but not credited by the bank. Okay, so this is the third entry of 6,000 rupees. Means check has been deposited for your into your account, but that has not been yet cleared. So what happens is uh, there is no entry uh, in the passbook of that 6,000 rupees. Okay, but we do an immediate entry of that 6,000 in our cash book. So here what happens is a check has been deposited, but when does bank made that entry in the passbook? Once that check is cleared. Okay, I have given told you that check might be of ICICI and you are depositing that check into SBI, and it takes 2 to 3 days time for check to be cleared. So in 2 to 3 days, the amount will be credited into your bank. So at the time, once check is deposited, you make an immediate entry into cash book of 6,000 rupees, but yet check has not been credited into bank. So this time bank account goes into negative. Bank account goes into negative. You see, the cash book is plus 6,000 and passbook is minus 6,000 here, or you can say zero. Okay, just because nothing has happened to passbook. So in that condition, what happens is passbook in the negative, that is, and you have started with cash book. Your first entry is the cash book, so your target is passbook, and passbook is the negative, so you will put a negative entry of 6,000 rupees. Or we have a direct route that check deposited but not credited into the bank, and so that will go into the minus side in the reconciliation if we are starting with the cash book. Okay. Now again, bank charges debited by the bank. So when we are making the bank charges, so we are not making an entry in the cash book. So our cash book is zero here. Cash book says zero, but minus 400 is the something that is happening into your bank side. Okay, into bank passbook. So bank is immediately charging the 400 rupees. Okay, and your cash book doesn't know, so you are not putting any entry for the cash book point of view, but there is a minus 400 entry in the passbook. So here again we say our target, that is passbook, that is into negative, that is going to negative, so we will put in the negative entry just because we have zero, no entry in the cash book, that is zero, and minus 400, so this is lesser. So if our target is lesser, so that will go into the minus side. I hope this concept is clear. We have to first look for the who is my target, and how do we set the target for BRC. So what is the very first entry? Is it cash book? If our first entry is cash book, then target is passbook. Okay, if first entry is passbook, then our target changes into cash. Here in this particular example, we are starting with the cash book, so our target is passbook. Okay, now we have 50,000 rupees in the passbook. Okay, so we will put that simple entry of plus 50,000. Now what we do, the first entry of 6,000, that is check issued but not presented for the payment, means uh, you have issued a 6,000 rupees check and you make an immediate entry into cash book, so your cash book goes low to 6,000, but check yet your passbook doesn't know about this 6,000 rupees, means your passbook is still higher. So say this is a condition when and this is a condition when you have passbook and cash book is equal. So we will, once we will make these kind of entry, we forget about what is the balance and rest of the entry. We will only focus on the one entry only. Okay. So we will see that this is the cash book and this is passbook. Okay. What happens in the cash book is you are issuing a 6,000 rupees check. So you have issued a 6,000 rupees check. So you are making an immediate entry of 6,000 rupees in the cash book. that 6,000 you have issued to Mr. Ram. Mr. Vinod has issued 6,000 rupees to Mr. Ram. So your passbook goes 6,000 below. But passbook is still on the zero, but because Mr. Ram has not gone into bank and not presented that, so it is again zero. So zero is much more than 6,000. So this is positive. So that will come into the positive side. Okay. Now, second, dividend collected by the bank. Again, this is cash book, this is passbook, both are equal. Then what happens? Suddenly, some payments that come into the bank account, that is dividend given to you of 8,000 rupees. So, and your cash book doesn't know about it, but just because dividend is a direct entry into your bank. Bank is authorized to collect that and on your behalf. So your passbook is not cash book is not knowing. So here our passbook is going to plus 8,000 and cash book is again into negative or zero. So 8,000 is much more than zero. So that is a passbook in the positive. So we will do 8,000 rupees in the positive entry. Again, the next condition is check deposited but not credited by the bank. In that condition, what happens is we are depositing, Mr. Vinod has deposited a check, or means check has been deposited, but bank has not cleared that check yet. Okay, so in that condition, so we do the Mr. Vinod do an immediate entry of plus 6,000 rupees because check has been deposited for Mr. Vinod into the Mr. Vinod's bank account and Mr. Vinod knows about it. So Mr. Vinod does immediate entry of that 6,000. Now that 6,000 is plus, but that has not been yet cleared by the bank. Okay, so bank this is still at the zero. So the passbook is the zero and cash book plus 6,000. In that condition, what happens is pass, passbook is the target and that is the negative here for the first time. So we will do the negative entry of 6,000. That is in the BRC, we made a 6,000 rupees entry in the negative side here. Okay. In the same way, again, passbook, cash book at the equal level. And what happens here is bank charges directly 400 rupees from your account. That is for something like annual charges. You say annual charge of your account. That is 400 rupees. What happens here? Bank directly charges 400. Means the bank account goes low. The passbook amount goes 400 rupees low. Now here cash book is still zero because that direct charges is not being entered in the cash book just because you don't know that this thing has happened unless you match in that condition. What you see that we cash book is at zero and passbook is at minus 400. So here passbook is lower than in the value than cash book. So passbook in the negative. So we will put a negative entry here. Okay. Now then what we'll do? We will do a total of both the sides. Uh, we will do a total of this what we have in the positive that comes to 64,000. Okay. So we will put the 64,000 on the both side. Then we will minus this 6,000 from 64,000. That is we have 60,000 and again uh, we will we have 58,000 and we will again reduce more 400 rupees more. That is we have 57,600 rupees. Now we will match from the passbook. If the passbook amount that bank has given us that is 57,600, then we will see in the bank reconciliation that all entries are proper. There is no confusion. There is no error in any entry. Okay, if your passbook balance is 57,600 rupees. In this condition, with these entries of 6,000 rupees when check issued, 8,000 rupees when dividend collected, and 6,000 rupees that will deposited in your account, and 400 rupees that has been debited from your account directly by the bank. So when we have these entry, and we have a cash book balance of 50,000 rupees in the starting, and at the time we see the 57,600 rupees is the passbook balance given by the bank. Then we say each and every entry is okay. When we do this BRC, there is no error. Okay. Now we will move to the second example. That is the second example is we have related to something when we start in the favorable condition, but we will start with the passbook here. So the very first entry that we have to make in here is like balance is showing 45,000 rupees on 31st May 2017. So we have deadline here again, that is 31st May, and we the passbook is showing bank passbook of MS and MS Bose and Co, that is 45,000. So we have here we have given entry of 45,000. So this will come into the positive side, and along with that we will see these three entries more. So what we see, that we have a positive entry for passbook 45,000. So here we have started with passbook. Now what is our target book? Always we have to find the with what with the term where how are we starting, and on the basis of that what is the target book. Now here we are starting with the passbook. So and passbook balance is 45,000 rupees. So in this condition, target is cash book. Okay. Now we will see the first entry here. Okay. And the first entry is related to uh, check issued before 31st May. So it is clear that check has been issued before 31st May. So that will come under the BRC of 25,940 rupees, but had not been presented for the encashment. So what happens is here that check is issued. So once the check is issued, the entry in the cash book, that is our target book, has made that we have done a entry exit of we cannot say that entry here. We are making 25,940 rupees payment to someone, that we will immediate do the entry of that uh, into the cash book. Okay, just because we are issuing, so we are issuing, so we know Mr. Bose and Co is issuing that. So Mr. Bose and Co is knowing that they have issued 25,940 rupees. Okay, so in that condition, we have our cash book, we have our passbook, and we have our cash book. Yeah, this is the cash book, and cash book is the target book. So what happens? Target book is goes in the negative with 25,940 rupees. So in that condition, here in the passbook side, passbook doesn't know, just because this has not been yet presented into the bank. What happens? Mr. Bose, Ms. Bose and Co has made that check, issued that check, but the person has not visited bank. So he has made a plan that he will visit on the 5th June for that payment. So he is not wrong. He can go anytime, whenever he likes to get the payment. But Bose and Co has issued, so Bose and Co has to make an immediate entry of minus 25,940 rupees. So they have made a cash book entry of 25,940 rupees on the immediate basis. In the that is in the target book, the entry happens negative. Okay, and your passbook is showing no changes in the account, that is zero. Okay, and here it is minus 25,000. So the target book goes into negative. Once target book goes into negative, we do the entry as per our target book. So here we have made an entry of 25,940. Okay, then we see that there's two checks of 3,900 and 2,350 rupees that has been deposited in the bank on May 31st. Okay, but that is a post dated check of June, suppose 5th of June. So what happens is the payment of that has been made, that has been deposited, but that is not credited into the account. So check issued of 29,900, sorry, check issued of 6,250. That is total of 3,900 and 2,350. So that is deposited into your account, but not presented into the uh, that is not presented into the bank, just because that is a post dated, or that is that the payment of that cannot happen in the banks, from the banks end, just because that is post dated for the June. Okay, and we are making that, we have BRC deadline of 31st. Okay, try to understand it. We have someone has deposited a check for MS Bose and Co, the of total 6,250 rupees, for that is a post dated check of June, but that has been presented on 31st May, on or before 31st May, but that is the date is written of June. So unless that date comes, that amount cannot be credited into your account, just because the that would be a dishonor of the check. Okay? So in that condition, what happens is the we make, or Bose and Co make an immediate entry in the cash book that this amount has been deposited by one of our customer, because customer informs to Ms. Bose and Co on the phone that yeah, I have made this payment. In that condition, what happens is that is an immediate entry in the cash book. Cash book means the target book here, because we have started with the passbook. So target book is cash book, and cash book is showing an entry of plus 6,250 rupees. Means that is going into the positive. And here the passbook remains at zero level. So this is the positive. Target book is positive. Target book is a positive. We will make an entry of positive 6,250. So this is how we see the, this entry. Now another entry related to check dishonored. There, there was also a debit in the passbook of 2,500 rupees in present of a check dishonored on 31st May. So what here is saying that check has been dishonored. So bank will not pay here. Bank will not pay that 2,500 rupees. Okay. But mm, mm, so we will see that there is a negative entry for that happened, because what happens is uh, check is dishonored, but we have made an entry of 2,500 rupees in the cash book that this has been debited in the bank. So what happens is we have put that check into the bank, and we have made a plus 2500 rupees entry in the cash book. So cash book here is again in the positive, but that has been dishonored. Okay, so that is not going to be presented added into your account or passbook anyway. So again, cash book in the positive 2500, and passbook is again 0. So our target book is again in the positive. So what happens in that way? That situation, target book in the positive. So we will put a positive. Now the last step, we have to match the account. So for that we will total the plus side. Once we total the plus side, we will total the 45,000, 6,250, and 2,500. So that total is 53,750 rupees. Okay, and in that way we will make the same entry here again, and we will reduce this minus entry from this. Once we reduce that, and what we see that 27,810 rupees comes here. So this should be our balance as per cash book. Now we will match the cash book. If the cash book balance is 27,810 rupees, and passbook balance is 45,000 rupees, and these kinds of entry has been made. So in that case, that account is correct. There is no error anywhere during the transactions, and all the uh, differences created due to delay or recording, non-recording of the payments uh, are made clear here. Okay. Now we will see another example that is related to overhead. So in the we will start with again the cash book in the overhead situation. Then we will move to passbook in the overhead situation as well. So we have BRC we have to make on 31st March 2017. So these are some transactions that Rakesh had made. Rakesh had an overdraft of 8,000 as shown in his cash book. So we have overdraft. We will immediately go to negative side for that entry. It's very clear. And for the rest, we will use the method we were using yet as the favorable way. At the time we have the favorable entry. How are we doing the entry? So in the same way, we will do the rest these entry. So how these entry has happened? Here we have started with cash book. It's written here that overdraft as per cash book is 8,000 rupees. So we have started with cash book. So our target is again. Okay. Now the first entry is check deposited but not yet collected, charged by the bank. Hmm? Means here what is happening? Check is deposited of 2,000 rupees. Uh, so we have entry of positive 2,000 rupees in our cash book. In the cash book, we have 2,000 rupees positive just because Mr. Suresh has called to Ramesh कि 2,000 rupees has been deposited into your bank. So you make that entry into your cash book. So Mr. Rakesh has made that 2,000 rupees entry in the cash book. So cash book goes into positive 2,000 rupees. But what happens with our target? The target is passbook. Okay. And once our target is at zero, means target doesn't know that this has been deposited into the bank because it takes 2 to 3 days time to take bank to for clearing that amount. For that time, this is bank amount that is in the negative side, or you say zero, but that is zero is lower than this 2,000, means our target book is lower than our the cash book. So in that case, what happens? Target book is lower, target book is negative, so that will go to minus 2,000. Okay. Now we are seeing that bank charges of 60 and 100 rupees. So the fourth entry here, there was a debit in his passbook of 60 rupees for interest and 100 rupees for bank charges. So suppose that overdraft is 8,000, and for that 60 rupees has been taken as interest, and 100 rupees is the yearly bank charges. Suppose on the 31st March has been charged from the bank. So in that condition, what happens? These are some direct entries made by the bank to cash book and uh, cash book and passbook at zero, and so suddenly what happens? 60 and 100, that is minus 160 has been made in the our target book or the passbook. Okay, so this is minus 160, and again we have 0 at the cash book level. So now we see that a target book is going into negative again, so we have put the negative entry here. Okay, now check issued but not presented for the payment. Okay, so in that case, what happens? We have 0 level again. We have 0 level cash book. We have 0 level passbook. Okay, what happens? We see that Rakesh has issued uh, 800 rupees check, huh, to Ramesh. Rakesh has issued 800 rupees check to Ramesh, and Ramesh is not going to bank. Okay, but what happens to here? 800 minus into cash book immediate entry, but because Rakesh has already made that entry into the cash book, so the cash book goes minus 800, and yet presented or not presented into bank doesn't matter, but that is still at the zero level. Okay, so this is at 0, this is goes negative. So in that case, our target book is at positive, so we have put here a positive entry of 800 rupees. Okay, now we have made a first entry of 8,000 rupees, so we will do a total from this side here. Okay? So we have total it. So total is 8,000, 2,000 and 160. That is 10,160 rupees. So here we have to put the same here, 10,160 rupees, and we will reduce this much amount of 800 here. Okay. So what we see, balance as per bank passbook should be 9,360 rupees of overdraft. If that is 9,360 rupees in the overdraft in the bank passbook as well, we will see our reconciliation is done. There is no differences now remaining. All the delay issues and single side entry has been resolved here. Okay, so we will now look into our last example, that is again the overdraft, but in this overdraft we will do we will start with passbook. So it is related to Asa and Co of 30, and we have to do the reconciliation on 31st December. So these are the entries that we have to make. Okay, so very first entry is, it is very clearly written that overdraft of my 20,000 rupees into passbook. So we will start with minus 20,000 rupees, as it is in the negative, it is in the passbook, so it is given. Then the interest on overdraft. Okay, the very first entry is interest on overdraft. What does that mean? Means passbook and cash book here, we suppose that is at the balance level 0 0, and suddenly we see that passbook goes negative of 2,000 rupees. That is the interest charge on the overdraft. We don't know in the cash book that interest has been charged, so passbook goes more negative, and this once this goes negative, here our target is cash book. Why cash book? Because we have started with passbook. We have started with passbook. Target is cash book, and cash book is at 0. Okay, So cash book is at positive, so we have made a positive entry of 2000. Then insurance premium paid by the bank. But again, bank is paying directly, cash book not knowing anything. So again, this has gone to negative. So we have put a negative entry of 200 rupees. Next is check issued but not presented for the payment. Okay. So in that case, check the cash book and passbook at balance level. Check issued. Check issued means immediate entry into the passbook. Passbook goes immediate entry. Sorry, check issued. That means immediate entry in the cash book. Cash book goes low. Means cash book goes low. Means our target book goes low. Our target book goes low means that is a negative. Same check deposited but not yet cleared. Means for Asa and Co company, uh, you are paying, you are depositing a check of 6,000 rupees. Means, and you are informing to Asa and Co that 6,000 rupees has been deposited into your account. So Asa and Co has made an immediate entry into the cash book. Means cash book again goes into positive. Target book goes positive. However, that not cleared, that will be cleared into 3 days, 4 days, 5 days, whatever time does it take to go through process. So our cash book at that is our target book as well is in the positive and passbook at zero level. So in that condition, what will happen for the target book? We are in the positive, so we will do a positive entry here. Okay, so positive entry here is made of 1,000 rupees. Then next is wrongly debited by the bank. Okay, so wrongly debited by the bank means cash book zero, passbook zero. Bank debit that automatically. Cash book doesn't know. Cash book at zero level, and passbook goes to minus 500 if target book is positive. So we will make a positive entry of 500. Now we have started with here. So we will make a total of this. That is 26,500 rupees here. Right? And what happens for the next? We will do a total of these entries. These entry. We will not look into this entry. This entry 70,800 rupees. This is something we have to match. So we have total this and debited it from 26,500 rupees. So when we deduce these entry from this 26,500 rupees, then what we see the amount comes that is 17,800 rupees. So now we see our cash book. If in the cash book, if we have 17,800 rupees overdraft, and we have started in the with passbook of 20,000 rupees overdraft, in that condition we will say that reconciliation is done. If all these matches, this and this matches, then we will say reconciliation is done. All the issues related to timing has been resolved. All the issues related to single side entry has been resolved. Okay. That single side entry, you say recording difference. Okay. So that has been clear. So I hope these things, these concepts of reconciliation, how we do the reconciliation is done. So we will now look some questions and answers. Now those question answers are generally related to you say mm, like multiple choice questions or objective questions. We will look into that. So here we will start with the question. The very first question is check issued to customer but not presented for the payment. So we have to find here is it any kind of gap, time gap, or error. What is time gap? I have already talked earlier that when we made an entry but payment not happens, from bank's end. It takes time from bank end. Okay. So there is a gap created between that payment and entry in the cash book. So check issued to customer but not presented for the payment. So this is a very clear example of time gap. Again, check is amounting 5,000 rupees issued but recorded 500 rupees. It's a clear blunder. It's an error. Everyone knows that if you have issued 5,000 rupees check, you have to make an entry of 5,000 rupees. So if you are making entry of 500 rupees in that place, means you are making some fraud or Gotala kind of thing. Hmm? And now we'll go to another question. Of I made some mistake in the question order. It should be question number 3 here. Okay. So interest credited by the bank but not yet recorded in the cash book. What happens is uh, some interest on your savings has been credited into your bank account, but cash book doesn't know about it. Cash book enters it for the with delay. In that condition, what happens is it is again a time gap example. Check deposited into bank, not yet collected by the bank. Again, this is time gap. The last question here is bank charges. Bank charge debited from firm's current account by the bank. So bank charges automatically, and cash book doesn't know. So entry happens at two different times. So that is a time gap example. Okay. Now we will look some further questions. So here is the answer of all those. Now another question is copy of customer account when appears in the ledger of the bank is called. So bank is making some copy of customer account when appears in the ledger of a bank is called. So bank maintains and ledger of each customer. So what is that called? That is called passbook. Okay. Next question is when does he bank debit account from the customer? So this is some misprint. So the thing is, the question here is uh, when does a user uh, do a bank debit? Mm, so in that case, uh, uh, when is debit entry? The question here is when is debit entry made into the account by the bank in your passbook? When is debit entry made in the account of customer? So that answer is when some money is withdrawn. When some money is withdrawn from your account, in that condition, what happens? Bank makes a debit entry from your account. Next is when does the bank again? I don't know why this is some grammatical error in the typing. I don't know why, but again, let me clarify the question. When does bank make a credit entry in the account? Same opposite of this. If you are withdrawing money, that is debit, and you are depositing the money, that means credit. Very normal. Normally, cash book shows a debit balance, and the balance shown in the passbook is credit balance. We know these are the opposite. If cash book debit, passbook credit, passbook debit, cash book credit. So these run in the opposite. Okay. Now, last question of the slide. Favorable balance as per the cash book shows which balance in the bank column of the cash. The question here is favorable balance as per cash book. We see in the cash book there is some favorable balance that shows which balance in the bank column of the cash book. So the favorable balance in the cash book means credit in the cash book side. So that is debit into the passbook side. Okay. So this you should be very clear about that. If that is debit in the cash book side, that will be credit in the passbook side. If that is credit into the cash book side, that will be the debit in the passbook side. And if that is debit in the cash book side, that will be a credit into the passbook side. You have to be very clear about this when you are dealing with the bank reconciliation. Next, next question is a bank reconciliation statement is prepared by. So, who do the bank reconciliation? It's obvious. The account holder in the bank, account holder want a match between the passbook and cash book. Okay. So answer is C. Bank reconciliation statement is, what is the bank reconciliation statement? Is it a part of cash book, part of passbook, or both? No, it's not all these three. It is a statement prepared by the customer. Because on the basis of this cash book and passbook, we prepare a separate entry. We have seen the example where when we are making the BRC statement, so we are making a separate statement. Okay, separate statement made by the customer. So answer is D here. Okay. Now next question is, a bank reconciliation statement is prepared with the balance. So, which balances we make the bank reconciliation statement? So, we take the both passbook and cash book, on the basis of which we make the bank reconciliation statement. That means our answer is C, both passbook and cash book. Okay. Now, another is passbook is a copy of, is obvious, copy of customer account made by the bank. Okay. Now next is unfavorable bank balance means. What is a unfavorable bank balance? That is the overdraft bank balance. Means, what does that mean? Credit balance in the past. You have to clear that there is some credit in the, no. This is the credit balance. Yes, this is the credit balance in the passbook. You have to be very clear about that. You have a credit balance in the past. A favorable bank balance means debit balance in the cash. Okay. Next is okay. In BRC, overdraft as per the bank is taken as a starting point. What action is to be done with the check issued but not presented? So check issued. So here we will see we have started with the passbook. Our target is cash book. Okay. So action to be done in the cash book. What action we need to do done is what action to be done with the check issued. So check issued. So our target book goes low, immediate. So in the BRS overdraft, passbook is taken as starting point. What action should be done with the check we issued and but not presented? So we have started with the passbook, okay, and the check issued but not presented. So our target book is our cash book. So when we issue a check, we make an immediate entry. Okay, so that goes into negative side. Okay? Once that goes into negative side, our target book goes to negative side. We will make it reduced. Okay? So here the answer is wrong. So it should be reduced. Okay? Okay. Now the question is, bank reconciliation statement is mainly prepared for. So why do we make a bank reconciliation statement? So Why do we do it? To reconcile the differences between the bank balance shown by the cash book and the passbook. So we just want to know what is the difference, and we want to reconcile between all those differences between the balance shown in the passbook and cash book. Okay. Now, a bank reconciliation statement is prepared with the balance of bank reconciliation statement is prepared with the balance of what? Bank reconciliation statement is prepared with the balance of either cash book or passbook. So we will start with anyone. We have to start with either cash book or passbook. Okay. The next question is, which of the statements is not the part of double entry system? So cash book, trial balance, journal, or BRF. So one of the statement here is not the part of double entry bookkeeping system. So that is BRS. BRS is a separate kind of statement that we make on the basis of cash book and passbook. So it's not a double entry system. Okay. Now next question is, we have to mark true and false here. So first question is, passbook is a statement of account of the customer maintained by the bank. Yes, or it's obvious, it's true. The passbook is a statement that bank gives to us. So a business firm periodically presents a bank reconciliation statement to reconcile the bank balance as per the cash book with the passbook, as these two show difference for various reasons. Yes, obvious, there may be some differences, and we have to do a periodical BRC for that, to avoid all those differences, to have the clarity. Now, third question is, check issued but not presented for the payment will reduce the balance as per passbook. Check issued but not presented the payment will reduce the balance as passbook. Which correct? Check deposited but not collected will result in increasing balance in the cash book with compared to passbook. Yes. Overdraft as per the passbook is less than overdraft as per the cash book. When these there are checks deposited but not collected by the banker. No, there is a false statement. So we'll look into it. Overdraft as per the passbook is less than the overdraft as per the cash book. So we suppose that here we is saying the overdraft is the passbook is less than overdraft in the cash book when check are deposited but not collected by the bank. No, it cannot happen. So when check is deposited into the bank, so in that case, uh, what happens is we make an entry into a cash book. Okay, so we make an entry on the cash book, but we don't make an entry of that into the, passbook. Okay, so in that case, overdraft will be again higher because that end is already in the negative. So if that is negative, and here we are adding some positive number in the cash book only, so this is not going to happen in the passbook. So overdraft as the passbook is less than overdraft as per the cash book. Okay? So it is the sixth is, the debit balance of the bank account as per the cash book should equal to the credit balance of the account of the business and the books of bank. Yes, always this will be true, that debit balance of the bank account and as per the cash book should be equal to the credit balance of the business account of the bank or books of the bank. Means credit of cash book should be debit of passbook, and debit of passbook should be credit of cash book. So here with that concept, this is true. The seventh question is, favorable bank balance as per the cash book will less than the passbook balance when there is an there are unpresented check for payment. Yes, of course, this is true. The eighth question is direct collections are received by the bank on behalf of the customer. Would increase the balance as per the bank passbook when compared to the balance as per the cash book. Yes, bank is directly taking some collections on behalf you of the customer. Then passbook entries goes up. It's true. So when payment made by the bank as per the standing instructions of the customer, you have authorized the bank to make your payment automatically. The balance in the passbook will more than compared to cash book. No, never. So passbook is making entry by itself, so it will goes on reducing the amount, but the cash book will stay at the same place. So this statement is false. So thank you. We have seen the bank reconciliation, and we have seen the method of entry in the passbook and cash book. Here we how we have started this chapter, and then we see the bank reconciliation. What is the bank reconciliation? Why do we do the bank reconciliation? And after that, we have seen the reason of differences. In the reconciliation, we come to know that we do the reconciliation because there are some differences between bank account and cash account. Okay? So we have seen the reasons of those differences. There are the three reasons we come to know: due to time, due to single side entry, or that is recording differences, or third could be some error. Okay, so we have not covered the error part. We will look into that into next video. Okay, then we what is the dishonor of check? We have gone through that in detail. Then we have gone through how do we prepare the BRS statement. What are the steps of those? How many types of BRS we can make? We can make a favorable starting with cash book and favorable starting with passbook. So this is two types, and then we are now unfavorable starting with a cash book and starting with passbook. So there are four methods. How do we do the bank reconciliation? And after that, we have seen multiple questions. So there are few errors in the typing errors. Uh, I will provide you the correct slide, and you go through this video. But the slide you will get that will have a correct question grammatically. All the grammatical errors will be removed. Okay. So thank you very much for joining this session. And if you have any query, I know that reconciliation is a bit tricky. If it comes into your mind once, it's okay. If it doesn't come into your mind, it's a bit tricky to know how do we do the reconciliation, because one side it is debit, another side is credit, another side it is debit, this side is credit. You know? So in that case, if you have any issues, anything related to this chapter or any other chapters of accounts or related to earlier videos, you write to me on this mail ID, that is ayushvrdhn@gmail.com. Thank you. Thank you for watching, and you can subscribe the channel of Antara. And thanks Antara for giving me this opportunity to come on your channel. Thank you everyone.